With the tremendous volatility in today's session, wanted to update the technical backdrop for the S&P 500 moving forward, talk about what we're seeing here. So today we had a very key red to green reversal. What we mean by that is the market was down. It was in the red by quite a bit. As a matter of fact, the S&P was down about 25 points at one point, down to 1135. And then once that happened, though, that triggered a lot of buying at the 1135 level, made a real hard bounce, and it's bounced over 32 points now. The Dow was down 200 points, and now it's up 56, so that's a 250 point bounce. So when you see reversals like this, you have to pay attention. You have to respect the price action and what the market might be trying to say. So we've been channeling here between 1120 and 1170 with brief moves above 1170 now for much of August, about the last 3 trading weeks. So we can cautiously now call 1120 a bottom on the S&P in the short term. This market is still in a downtrend, so the intermediate to long term is a little bit more complicated. But in the short term, we feel that we've spent enough time in this range, and there has been enough support to justify getting bullish here in the short term and expecting a move back up to the August highs of 1200 to 1250. Now, also with today's key reversal, what's nice is 1120 will remain key support, but we now feel that 1135 is a key level. With the really hard bounce off of 1135 today and the reversal into the green, we're going to be putting a lot of emphasis now on the 1135 level. We expect that to come into play as key support. And we would even go so far as to say if we break 1135 in the short term, we expect to break 1120 and would expect more downside. Now, let's see what we have going on in the days ahead, what to watch for. The S&P still hasn't managed to remain above 1170 for an entire trading week, so that will be the goal next week for the bulls, is to remain above 1170 for an entire week. We also have trend line resistance, which is going to come into play around 1180, 1185. So really 1180 to 1190 is going to be trend line resistance going into next week. See if the bulls can push through there. And then on top of that, this big distribution day here, when the market really started to crack. This was on Thursday, August 4th. So if the market can get above trendline resistance and then get above psychological resistance at 1200, this is going to be the next area to watch. 1200 to 1260. It was a big daily range on the S&P. There's likely a lot of trapped buyers up there who will look to pair positions if the market can rally up to those heights. Really quickly, we want to take a look at a 60-minute chart and show the capitulation spike we had go on. This is a 10-day, 60-minute chart of the S&P 500 ETF SPY. Now you can see when the morning started this morning, made a really big dip down to 113.85. Notice though that is just above one of our support channels here at 113.70. Also notice the volume. Look how high the volume is. So that dip, that's what we call capitulation. That is the highest volume in the last 10 days in a 60-minute period. So this range, this is why we're calling 1135 key support on the S&P, because a ton of volume came in at those levels and caused this great bounce. So that's just something we wanted to point out. Moving forward, we're still working with this gap down resistance around 120 on SPY. SPY was never able to get above 120 earlier this week on the rally. So watch 120 on SPY. That coincides with the 1200 level on the S&P 500. And then after that, you've got 120, 150 just about on SPY, which is going to be around 1215 to 1220. So this is all about previous support turning into resistance on the way back up. 1200 was a key support level. We broke it. It acted as resistance here. So we'll be watching to see if we can then break back above 1200. Now, there's a lot of data coming out next week, so keep that in mind. A lot of jobs data starting Wednesday with the private number, and then the government number will be out on Friday. So if we do rally here and we start to respect resistance just ahead of those numbers, could be a good opportunity to possibly get short and provide you with some levels to trade against. Now, what we mean by levels to trade against is when the market starts fluctuating in a tight range, say like up here around 120, 130 to 119, the market was clearly in a range. So you can start getting short, and you could put your stop loss at that 120, 130 breakout level, or you could get long and you could put your stop loss at that 119 level. So we like looking for ranges like that because that allows us to identify where our risk is. You notice we had the same thing happen earlier this week, traded between 112.20 and 114. Once we got that breakout above 114, you can see what's happened with the nice rally. Came back down, did a retest of that 114 level and bounced. So the trend right now on the short term is in the bulls' favor, and we recommend waiting to see how things play out over the next couple days and reevaluating the situation from there. So once again, to reiterate, we're moving our key support on the S&P 500 from 1120 up to 1135. That is today's low, where we keep our key resistance in the 1200 to 1220 range. Past that, 1250 is going to be a real tough hurdle. So there you have it. We're pretty much range bound still. Not much has changed as far as the overall range, but we do have some higher lows that have been put in, so we can now adjust our strategy and put more emphasis on those levels. We invite all traders out there to join us in our live day trading chat room for discussion like this, as well as stock tips and penny stock alerts that rise as much as 100 to 200%. The URL for that is www.stockhaven.com/stockchat. Thank you.